All right, welcome back everybody to QuickBooks. Once again, this is the very last chapter that I will be teaching you today, which is chapter 14, what you have to do when you have to close up the books, reach the end of your accounting period. You need to make your adjustments and whatever you need to wrap up for your year-end procedures. Okay. So again, if you're following along with me, you need to have Adjustments 21 open up, and let's get started. So the very, very first thing that we're introduced is going to be the General Journal, okay? So we took a glimpse of this in Chapter 1, right, and Chapter 12, because Chapter 12, you needed to use the General Journal in order for you to help set up opening balances in other accounts. You only need a general journal if you are a pre-existing company that is currently switching over into QuickBooks. But if you're starting your business from scratch, nothing else is in there, right? Then you don't need to make a general journal because you should be starting your account balances at zero. Nothing has happened, okay? So in this case, right, we're going to be using the general journal one more time, and this time, right, it is for the purposes of wrapping up the end of the accounting period, right? So therefore, we need to use general journals for the reasons of either whether we need to recategorize our expenses, whether we need to recategorize our transactions in general in case we made a mistake somewhere. Other things is we could do is we can use it to allocate prepaid expenses. Okay, another one that we can use it for is to do non-cash transactions such as depreciation, bad debt expense. Okay, and then last but not least, if you are going to be a sole proprietor, you need to know that you do need to do a journal entry to close out your owner's draw, your capital investments, and close them all out to your owner's equity. Okay. So this is additional things that you have to know to do, right? So for those who were in my previous accounting class, you guys already know how to journalize a journal because you've been practicing it this entire time. Now, most cases, the adjustment is actually more towards for the accountant to do themselves, right? Because because for this one, if the bookkeeper does not know how to journalize, or because for most cases for QuickBooks, right, you don't even need to journalize. If you know how to fill out a form, the QuickBooks does the accounting behind the scenes for you. So once again, as an accountant who's experienced and understands how to use a general journal, you are able to manipulate QuickBooks in a way that will best fit you, not the other way around. But for someone who is in the position who's just being told what to do, enter a bill, enter an invoice, and has never had any accounting experience or knowing how to even journalize a journal, this is where the adjustments or the journal itself is actually done by the accountant themselves because they're the ones that are going to be wrapping up the end of the accounting period. They're the one that's responsible to create those financial forms and etc. and etc. Okay, so as far as this, you again, this position for working with QuickBooks, you do not need to know accounting. Okay, but the accountant who's using QuickBooks or who is the accountant / admin user of the QuickBooks should know how to journalize a journal and also understand and have the accounting background, because in case one of your employees or one of your coworkers, right, they enter in a wrong transaction and they don't know how to fix it, you need to be the accountant needs to be the one to be able to resolve that situation and fix it, whether by using a general journal or not. So that's what most cases are. If you do make mistakes or you end up accidentally categorizing a transaction in the wrong account, that's exactly why the accountant must know how to use a general journal and when to use it. So in this case, recategorizing transactions, okay? And that's what we're going to be doing, taking a look at for the very first example here, that we're going to go ahead and recategorize our first general journal entry. So how do we access this, okay? So you just simply go to your QuickBooks at the very top of the window. You're going to go to company here on the menu bar, and you're going to go all the way down till you see make general journal entries, okay? For the accountant version, right, we have the accountant menu bar here as well. You can also make general journal entries as well, okay? But however, since, you know, the assumption is that you're more likely to get Pro, Premier, or Enterprise, your go-to is to be on the company menu bar and click on make general journal entries, okay? Now, I'm going to go ahead and click make general journal entries here. And this is what the window would look like. You're going to get a little error message box. You can ignore that. You could click don't ever display this again and click OK. So it never will pop up again. All right. So in this case, right, here we have general journal entries. Okay. We have the option to pick the date. So usually general journal entries, once again, it either happens at the very beginning of the accounting period and it ends on the very last day of the accounting period. So in this case, I believe they want us to do January 31st of 2021. 2024, I believe, actually. Let's see. All right.
Not 25 in the book.
Okay, 25. Okay.
Yeah, 21st.
Okay, so let me just fast forward like that. There we have it. Oh, nope, that's July. But close enough. I can just scroll on back. And January 25th, January 31st, 2025. Right? And the way that you would put a reference number is whatever you want to make easier for you to recognize. Now, in most cases, I would ideally use some kind of, numeric device or even a combination of words and numbers. But in this case, they want you to make it 2025-1. Now, in this case, you're not obligated to have to listen to what the book says. If you want to, you can make this GJ-1, making that general journal -1. You can make this ADJ, which is adjustments -1. Whatever makes it easier for you to recognize. And then they have this little button here that says adjustment entry. In this case, this is not an adjustment entry, which is quite weird because we are making an adjustment. But I don't know. We'll just listen to what the book says in this case. So we're going to uncheck that it is not adjustment entry. Okay. So now the situation says that we were paying for rent, but we accidentally placed all the rent expense into one account and forgot to split it up into utilities and rent expense. So right now, all the money's in rent expense, and we need to transfer some of that money out to pay for utilities. Okay, so in this case, right, number one thing that you should do is you should always refer to creating a bank account for general journals. Now, what is the purpose of creating a general journal bank account? All right, easiest thing I can say is that it will help you locate your general journals a lot easier. And second of all, for any reasons that you need to use this, right, you definitely don't want to clutter your bank account itself, or in this case, you want to make sure that you use some kind of account so you are able to recognize that you're able to find these transactions, right? for most cases, if you did not create a bank account for general journal entries, you're going to definitely find it at the very, very bottom of your chart of accounts, and it's going to be considered a non-posting transaction. That's what happens if you don't assign your general journal to an actual bank account. It's going to be found at the very bottom of your chart of accounts where your general journal entries are going to be. Now, in this case, QuickBooks recommends you to create a general journal bank account so it's easier to just locate. All right. And on top of that, if we're making adjustment entries for a lot of the things that we encounter, such as, depreciation expense or whether if we're recategorizing something, right? At least you're able to keep track of it and making sure that you did do it instead of create the journal and then completely forget about it. Okay? So that's the very first thing here. And the memo here is going to be to recategorize expenses. Okay? So that's the very first thing, is that we're going to make sure that this general journal transaction is going to be in the bank account, right? We don't need to fluctuate. We don't need to add any debits and credits here because, once again, this general journal is not to increase or decrease in an account. In this case, we're taking one account and moving the information into another account. So this right here is an internal general journal transaction where we're not affecting anything other. It's not an outside sale, right? We're not selling to our customers. We're not dealing with any vendors. We're dealing with transferring information from one account to another. And that's what we're doing here, just recategorizing expenses, right? So the very first thing that they want you to recognize is going to be utilities expense, okay? Because in this case, right, I've mentioned before, we accidentally paid for the rent for the entire rent, but we forgot to take a small portion of that money to go towards utilities. So that's exactly what we're going to do. We have the utilities expense, and we're going to be taking it out from my rent expense because I end up dumping too much money into my rent expense, and I need to distribute it out to utilities. Okay? Now, here's the cool thing about QuickBooks here is that if, let's say, I go ahead and type in that my utilities expense was for $25.62, right? And then if I click away, it's going to automatically say, well, then I need a credit balance of $25.62. But in this case, that's in the wrong account. It's supposed to be up here. Okay. Now, if I were to accidentally fat finger and say I accidentally put $28.62, what's going to happen there? If I click somewhere else, QuickBooks is going to automatically calculate that I am needing a debit of $3 somewhere. Okay? So in this case, QuickBooks is preventing me from making my fat finger mistake here because it's telling me, well, if you have $25.62 on the debit side and you have a credit of $28.62, those do not match. You're taking too much out from rent expense, but you're distributing less into the utilities expense account where we're missing $3. So in this case, QuickBooks will not let you enter in the transaction if your debits and your credits do not match. And once again, that rule applies for when you learn about how to properly journalize a general journal. The rule number 1 is your debits must always match your total credits. And in this case, they don't because I accidentally fat fingered $28.62 in my credit instead of $25.62. So in this case, the correct amount is the $25.62. So what I'm going to do here is I'm going to go back here and type it in, $25.62, right? And I'm going to click that tab. And then now it's saying there's 0 here. No $3 here, obviously, and then no $3 here. So in this case, you just have to go back and re-edit this. But all these extra zeros is not going to affect the account at all just because your total debits match your total credit. So in this case, you don't need to add anything extra, right? Now, if you notice this, right, my memo had automatically filled in for me saying that this is a recategorizing expense for the memo, right? So once again, all these numbers that are zeros here, you can ignore. I mean, you could try to clear them out, but they're just still going to be there. So once again, that's my general journal, right? My debits match my credits. Everything looks good. My memo says I'm recategorizing the expense. Now, is there a class assigned to this? Let's see. Okay, so I just have rent expense, no class that's assigned to it. Okay, so great. Now that's my first general journal, and what I'm doing is I'm moving from one account to another, and I can go ahead and click Save and Close. Okay. So once again, if I end up going back to my my chart of accounts and I see that I have a bank account for general journals, if I click on that, right, it's going to show me the register and show me that the transaction that I done here, right, it did not affect my bank account, did not increase it, nor did it decrease it. But what I can see here is that if I were to double click on this exact one that I just did earlier, shows me that I transferred $25.62 from rent expense and transferred it into my utilities expense. So that is what I mean by, assigning this to a general journal bank account. Because if not, and I were to just ignore that, you would find your general journals way at the bottom of the chart of accounts, right here where it says non-posting. It's going to be down here. All right. No account number correlated to that. It's just going to be down here. All right. Or another case, if you run a general journal report or your adjustments report, whatever you want to call it, then you'll be able to locate your general journals there. But they do say, rule of thumb, best way to keep yourself very organized is to just go ahead and create a bank account and name it general journals. So then every time you enter in an adjustment entry, you're able to locate it right here in the general journals bank account register. Okay. So any questions in regards to taking a look at recategorizing this expense? Nope. Okay. So then when we talk about recategorizing expense, right? Let's take a look at that general journal one more time. And let's notice this, okay? If I double click on my general journal, notice this. I'm only allowed to adjust accounts only, okay? So that means I am limited to only making my general journal entries for accounts only. Now, what happens if I accidentally made a mistake into doing something with my items? If I did, then I can't use a general journal entry to record my transaction. Instead, I would have to actually create what's called a $0 entry. A $0 check, or whatever it's called, right? $0 check. That's going to allow me to switch between my accounts and my items, right? So let's take a look at that check. So once again, when I open up a check, you're going to notice I have two tabs. I have one for expenses, so for my accounts, which once again, it'd be pointless to use if you're going to use it through your general journal. But in this case, what if I want to take my expense and divide it amongst my items? You can do that too, and that's exactly what we're going to take a look at today. Right? And here, items, right? This is where you can recategorize your items. All right? So with that being said, this is going to be what you're going to be doing is that if you need to recategorize items because you made a mistake or you place them in the wrong, or when you sold it to your customer, you place it on the wrong form, then this is how you can either recategorize or correct this error, right? First thing you want to do is you want to ensure that you want to be not in checking, but into general journal entries. It's going to flag you saying, this is it's an account, yada, 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 and you're going to click OK, because you're charging your expenses to a bank account. In this case, you can ignore that because, once again, we're not increasing or decreasing anything here. We are just going to create a general, in this case, a $0 check to recategorize some expenses and some items. So in this case, write your number here. Now they told you to use 2025-1. Now, since this is going to go into your general journal entries, you want to make sure that's a number 2. Okay, because once again, this is we're making an entry into the general journal itself. So by doing so, you need to make sure that the reference numbers do match, and you don't override or over accidentally place this in the same account with the same account reference number. Okay, so in this case, it's going to be for the 2025-2, right? Keep 0 in this amount right here because we are going to make sure that the amounts do end up equaling 0. Okay? So the very first one here is for the $0 check is that we're going to make sure that the payee that we're going to make it out to is actually going to be QuickBooks. Okay, hold on. It says QuickBooks adjusting inventory, okay, which we're going to associate that as an other name account. So the payee that we're going to write this out to is going to be QuickBooks adjustment inventory. Okay, so in this case, never been in here. So what you're going to do is you're going to quick add this, okay, and you're going to place this person as an other name, okay, because once again, we're writing this out to nobody, right? This is a $0 check that's going to be within the books itself, right? We're not writing this check out to a specific person. We're going. Go ahead.
No, in the book, it doesn't say QuickBooks. It says Quick Add Inventory Adjustment.
Oh, okay. My bad. Okay, I did not. Okay, because, yeah, sorry. My notes did not say that. My bad. So, again, inventory adjustment. Okay.
Yes.
That's my fault. I did say quick add. So, quick add inventory adjustment. So, once again, I'm going to have to redo that again. We're going to quick add this. And it's going to be on the other names list because, once again, we're not writing this check to anybody. It's just a means to have a placeholder name so we can make our adjustments to inventory, right? So in this case, right, we are trying to refurbish a camera, right? And in this case, this is exactly what I was talking about when you are looking at an item and you're trying to refurbish it, fix it or whatever it is, right? Trying to make it new again. You obviously cannot put that in the new inventory, right? You need to create another account to place it in to represent that this is a used camera, right? It's got minor problems with it, but again, we took it in and we made fixtures to it. That's what this $0 check is going to be about, is that we want to make sure that when we're recategorizing this exact camera, we're going to be not putting it to inventory. We're going to place it into another account for refurbished inventory items. Okay? So first thing that we're going to recognize here is the expenses that we had to encounter for the fixtures that we made for this camera. So in this case, we're going to go ahead and we're going to credit. No, in this case, we're not going to credit. We're going to, in the account that we're going to be using is going to be cost of goods sold. Okay? And it's going to be in the amount of negative $75. Okay? The memo here is going to be, let's see. The memo is going to be parts to repair camera. Okay, that's the expense that I incurred was $75 to repair this camera. All right, and it's now $75. So right now, your amount is negative 75. However, I'm going to go ahead and apply that to an item because we need to represent that we no longer have the camera SR32, right? Because this is the camera that we are going to subtract out because, once again, it was broken and we need to refurbish it, add some fixtures to it. Maybe we need an extra part to remove and then install it back in again. So in this case, I need to make sure that I write that I remove this camera from my inventory because, once again, now that I made my fixtures to it, it cost me $75, right? And in this case, it cost me $450 for this camera. And what I'm going to do here is I'm going to drop it into another account for the refurbished, okay, SR32 camera. Okay, and then this one you're going to add as 1 because now we're increasing this item account, all right? And we're going to make this $525, I believe. Okay? And once again, by me adding this number in here, now it says, okay, you have changed the cost of the camera here. No, in this case, you're not going to update it because, again, every camera is going to have a different fixture to it. So you definitely don't want to save the changes in the refurbished camera because, once again, it depends on what the fixture was. In this case, it cost me $75 to fix. So therefore, I need to add that back into my refurbished amount. And here, your total here is 0, right? That's our goal because in this case, I'm taking one of my cameras, right, for $450. Okay? I'm adding $75 to make fixtures to it. And I'm going to dump it all into this new item account for the refurbished camera SR32. All right? And that is exactly what I'm doing. I'm subtracting from my original inventory and placing it into another inventory asset account. All right? Or in this case, item account. So once again, once that's there, I believe the next thing is that this is going to be, this item is going to be linked to, okay, no, whatchamacallit. You don't need to link this to anybody, no customer and no person necessary for this one. All right. So there we have it. That's how we complete a $0 check. All right. To move from item to item, you can move expenses to items. All right. And that's how we recategorize it. All right. Any questions there? Okay. Save and close. And once again, because I saved it into my general journal entries, like I've mentioned before, if you put 2021-1, it would overlap with this one. So, but the only difference here is one's a general journal and one's a check. But you still want to make sure that you keep those numbers the same or keep them on a track where you're keeping yourself organized. So here you go. There it is. I put my camera in there for the $0 check. All right, for my adjustment here to recategorize my items. Okay, Any questions there?
No.
Okay. So that's that section there. Now, another way that you could actually use this $0 check is going to be to use for bartering. Now, what is bartering? Bartering is some kind of exchange for services. So in this case, right, in this example here, we had a third-party vendor for Wong and Son, right? They are photographers themselves. What we ask them to do is, since you're going to be doing Anderson Wedding's photo shoot anyway, why don't you retouch the photos, and instead I will provide a service for you, so then it's a fair trade-off exchange of services. All right? That's bartering, okay? It is not illegal to trade services for another services, okay? It's only illegal if you pay under the table, or if this trading is trading for uneven amounts, or whatever you want to say it, okay? But in this case, it's completely legal because it's under the contractual agreement whether, okay, if I provide this service for you, will you provide this service for me? It's a fair trade-off. And if you guys mutually agree on that trade-off, then bartering is completely legal, 100%. And instead of billing the individual for retouching, right, you're going to provide them right around services to provide for them for an outdoor photo session. I think it's indoor photo session for headshots for the company. All right. So in this case, that's the fair trade-off here, and that's what you can use $0 checks for. In case you have one of those instances where you have a service for a service and you do a fair trade-off and you guys both agree to it, then go ahead and write the $0 check. Okay. So this example here, once again, we have Wong and Son. Once again, they're the people who are responsible for taking the pictures for the Anderson wedding. And what we're going to do is we're going to assign the check to Wong and Son for the bartering services. Okay? So once again, let's go ahead and dive right into the $0 check. Now, yes, you could use the register to create your general journal entries, but you definitely want to be careful just because here, right, you don't want to directly put it into the register because you do need to have it either as a general journal or a $0 check. So it's going to be a little harder to use the register to do those things. So the best way to do it is to go ahead and actually physically write those checks or physically write those general journals. So in this case, I'm going to write my next general journal, okay, for $0 check, okay? And this time my reference number is going to be 2025-3. Your book says it's still 2. Okay? The payee that I'm going to be doing this for is going to be Wong and Son. Okay? Now, once again, the information fills in here. Now, let's see what the items that we asked them to do. Okay, so we're under items. Okay? Now, the memo here is going to be barter retouching for headshots. Okay. All right. And let's see what the details go into this check. So in this case, when we're bartering, we're going to make 2 retouching items. Okay, so item is going to be retouching. Okay, and the description, pretty straightforward, should say retouching. All right, you want 2 of those, right, which are $50 each. So that's a total of $100. Okay. And in this case, right, let's see, we are going to make the retouching, okay, be in this case, it's going to be positive, right? Because we're trading off the retouching services, and we're going to bill this to Anderson Wedding. Anderson Wedding for Michael and Sarah. Okay? And yes, we're going to keep it billable, and class is San Jose. All right? And for that services, right, we're going to do an, I believe it's an indoor photo session. Okay? So one indoor. Okay? We're going to do it. Okay? This item is associated with an income. Yes, we are clear with that, but we're not going to use it as an income. Because in this case, we're going to say quantity. Okay, so I made a typo here then. Indoor photo session. Okay. Okay. And I want it one item. Okay. Indoor photo session. I don't know why I'm having such difficulties getting through here. All right. Tab. Tab. Okay, and in this case, I'm supposed to be able to type in quantity of 1, but this right here, I have to put negative $100. Okay, because in this case, 1 hour photo session costs $95. In this case, I'm doing a fair trade-off. So if retouching for 2 hours only costs $50 each hour, then that gives me a total of $100. In that case, I'm going to give them a fair trade-off saying, I'll go ahead and trade you 1 hour indoor photo session for headshots, right, to total up and match the total amount of $100. Okay? So then again, once again, you have changed something. You want to make sure you say no, right? We don't want to change indoor photo sessions to be negative 100 anymore. We want to keep it at 95, so you don't need to save the changes there. Okay? So once I have that, then all I have to do, right? Nobody I need to nobody I need to assign this headshots for, right? In the description, you're gonna write headshots. Okay. And then once again, this is not billable to anybody. Okay. Headshots is not in the my bad. Cancel. I hit the wrong one. In description here. Okay. And in here, that's where I want to make sure that I also indicate that this was a San Jose location. Or this involved the San Jose. So, okay, San Jose. Now, as you can see, right, our fair trade-off is I'm going to replace 2 retouching photos for an outdoor or indoor photo session, right? And look at my amount here. It's still 0. So this is called bartering, where you do a trade-off, an even exchange for services, right? And by doing that, this is how you go ahead and do this right here, how to barter with using a $0 check. Okay. Save and close. Okay. Any questions in regards to $0 checks?
No.
Okay. All right. So next section we have here is going to be for voiding, editing, and deleting transactions. Now, of course, editing a transaction is quite easy, especially because it's technology. We make mistakes all the time in technology. You're able to edit anything at any given time. But of course, as a, if you're working at a company, you want to also be professional about it to try to limit making mistakes. But sometimes if you're working so fast, you might accidentally miss a reference number or a check number or something as small as that, which gives you every right to go ahead and go back into it and make sure that you make those modifications. So then when you do look at that transaction, it's fully has all the details that you need for that transaction. But in this case, right, we're saying that, well, you can edit transactions at any given time. You don't need to wait for anybody unless you don't know what you did wrong and you're the kind of person that doesn't have the accounting experience, and or if the company wants to put a safeguard on you as an employee to have the accountant be able to edit all of the information. Okay, if you guys remember when we set up users and passwords, right, we can allow the users to either have full access to all of the transactions, have the capability to void, delete, and edit transactions. But we also have the limitations where we could say, no, they need to have permission in order to edit, void, or delete a transaction. So with that being said, right, it really depends on who the person is in the company and whether you're experienced enough to be able to have those privileges, or if your company's that's restrictive, you do want to make sure that you follow company guidelines. And if you are stuck in a position where you can't fix something because you made a mistake and you need to call on your accountant, then that's just how it is. But here, as us learning about QuickBooks, yes, you can edit, void, delete transactions all you want, okay? Because again, as a person who's learning about QuickBooks, you need to know how to be able to delete, void, and edit these transactions anyway. So here we're going to take a look at an example of an invoice where maybe our sales representative forgot to add something to an invoice, okay? So very first thing that we're going to do is we're going to go ahead and locate this person, right, by going to the invoices and clicking that previous button here. So I'm going to go to create invoices, okay? And I'm going to go ahead and click that previous button, and it should tell you that it is the Maria Cruz branch opening, invoice number 2025-106. So good, right? Now, most cases, you might not get the right one right away, but because we were given this specific instruction saying that the person who just recently entered this in, they forgot to add in an additional service. Okay, so in this case, we could just go right back ahead by hitting that previous button. Okay, so with that being said, we need to add to their outdoor photo sessions, and we need to add 3 of them. All right, so this can only happen if you have not sent out the invoice. Now, most cases, if a customer is really, really honest, okay, or they're looking at their invoice saying, where is my 3-hour outdoor photo sessions? Did you remember to put that in your calendar? Did you remember to place that as an order for me? Because if you don't show up on that day because I ordered 3 hours of outdoor photo sessions, then I'm going to complain to you. All right. And if that's the case, that's more the reason why you would have to reissue another invoice with modifications. Okay. So if you printed this one out already and you sent it out and they're telling you to revise it because they want you to make sure that you include those 3-hour photo sessions, then you need to reprint it and make changes to the invoice itself. So again, 3 hours of outdoor photo sessions. Okay, so there you go. All right, service. Okay, And what you're going to do here is you're also going to modify the memo. So instead of 3 premium packages, right, you're going to say 3 outdoor photo sessions and 3 premium packages. Okay? You can re-edit the note here. And again, best rule of thumb here is if you have already sent out this invoice to them and they're complaining and you need to reissue them a new one, you do need, in fact, have to update this invoice number to reflect that you made changes. So in most cases, a lot of people do here is they put an R to represent as revised or revision. All right? Meaning this invoice I've already reissued. I already issued them the invoice. Now they want me to revise it and send them a new invoice. And that's exactly what you need to do here. Now the book doesn't tell you that, but it should be general rule of thumb. All right? That's how you keep your transactions accurate. Now let's say you didn't send this invoice out, then you'll be okay with the 106. All right? You'll be okay to just go ahead and edit it that way, right? Because maybe, someone went down through the invoices one more time to just guarantee on their calendar, okay, this is true. Then there you go, and they find that mistake. So once again, if that's the case and you haven't sent it out, you don't need the R. Okay? So once again, everything looks good. And what you're going to do is save and close. And it says, you made changes to this invoice? Yes. Right? That is how easy. You can edit anything, whether it's editing a person, editing a transaction. You can edit it as long as you want and as long as it's within company policies. Okay? If they allow you to edit or modify a transaction. But that's the great thing about QuickBooks is because it's technology, you're able to just go in there and edit, all right, at any given time. All right. Okay, so voiding and deleting. Now they do have a list of recommendations on what to do when you are voiding or deleting a transaction. So this basically tells you if you void a transaction, what you're essentially doing is you're just leaving all the information there and you're just zeroing out the accounts and basically undoing all of the accounts. However, you are still left with the information such as if you wrote a check and you void it, the check is still going to appear there, right? Saying that you used this check number already, but the balance in that account or that check is going to be reflecting at 0, and it's going to revert whatever transaction that you did to void that transaction, okay? Where deleting is where you get rid of the entire transaction. So when you get rid of that entire transaction, it pulls all the information from your QuickBooks and it pretends like it didn't exist at all. Now, there are dangers and things that can happen because sometimes, right, if you delete too many transactions, QuickBooks might not be able to recognize it and you're going to have a lot of holes in your transaction if you try to delete it and then try to re-enter it in again, especially with paychecks, right? If you delete a paycheck, right, even though it deletes everything in there, you could have a potential possibility of, overstating a specific account by doing it again, entering it again and again and again, right? So you definitely want to be careful on voiding and deleting transactions, only if it's completely necessary. And of course, deleting and voiding transactions are just as easy, okay? So if I go to my invoice, once again, I go back to that invoice, right? I can simply delete it right here with this delete button. Straightforward. So it's as if this invoice never existed. I can just erase it right now. Okay? Again, same thing with checks, right? You could delete checks, right? You go to the edit and it gives you the option to delete anything that you want. So if I go to my check register one more time, where'd it go? There you go, check register. If I go to my check register, okay, and go to checking, all right, And let's say I messed up here and I want to delete my transaction. You can either right click and you can either delete it, or you can go to the edit menu and it should give you the option to delete this check and or void the check. So deleting a transaction, voiding and editing is really easy. All right, just make sure that you do follow the guidelines because there are dangers of voiding and deleting transactions, especially if you're doing it for a company. The more often you keep deleting transactions, the more reasons that you're posing that a fraudulent charge is happening. Or you voided a check, right? But you forgot to record the number in there, or you deleted the check. Now you can't use that check number because it's already been printed, right? And you don't record it in your books, then the books is going to recognize that you have a gap in your checkbook. Why? Okay? And then of course, if people who don't know who you are, automatic assumption is, are you trying to steal from my company? All right? So there's a lot of rules and regulations that goes along with editing, deleting, and voiding transactions. Okay, make sure that you know what you're doing. But once again, if you're doing this for practice purposes only, you are okay to go ahead and fix, edit, delete whatever you need to delete. Okay. So that's just a little guidelines there, and they kind of give you how to do it. Pretty straightforward, right? It's if you can edit any transaction, you can void and delete any of them as well. So with that being said, how do you delete all transactions but keep old information, such as keeping your lists in contact? So all your customers, all your vendors, all your employees, keeping all your default settings or your preferences, right? I want this preference to make sure that I do accrual accounting reports. I want to make sure that my preference is set that I want this to display on my homepage, right? How do I keep all of that information or the products that I sell, right? Without having to either delete the whole file itself or recreate a new file? Yes, you can do that. It's called condensed data, all right? Where you can use a file, right? If it took you that long to build your file, your company file, right? But the one thing that you're struggling here is that, let's say you built your company file in January 1st, right? And it's already July today, right? July 27, right? All of a sudden you're seeing that your file just keeps getting heavier and heavier and heavier, and all the transactions that you're keeping in there are weighing down your company file, right? And you don't want to lose all that information. So what you can do is you can back up your file, right? Create a company backup, and then go ahead and delete all the transactions while keeping your customer, vendor, employee list, your items list, your payroll items list. All those items lists and preferences are all going to stay intact. And you can even filter it or modify it so then you stop at a point. So maybe I want to delete all my transactions from January all the way to June 31st, but still keep my July 1st all the way to July 27, which is today, right? I can do that if I wanted to, and it's called the condensed data utilities, okay? Now, once again, your book says do not do it, and I will not do it today just because, once again, we're still working on this file. But if in case you are creating your company file and you just want to clear up a lot of your details or a lot of your transactions, you can go ahead and do that, right? You're going to go up to your file on your menu bar. You're going to go ahead and click on utilities, right? And in that utilities drop list, you will have the option to condense your data, okay? And if I click on condensed data, first thing it's going to ask me is I need to create a company backup first, and then I need to create a folder for myself to save where I want all these items to be so that in case I ever need to go back to it, I'm able to open up either a backup file that has all those transactions prior to whenever I set my my data to condense for. Okay, so once again, that's what you do. Again, do not do it in your book because we're still using these file, right? We still got a couple more things we got to add in here. So I don't want to delete anything just yet. So with that being said, that's how you do it. If you want to keep the file, keep the list, keep all your people, keep all the items that you have because you've spent so long building it, but you want to get rid of just the transactions itself, you can do that by going to the condensed data settings. Okay. All right. Any questions there?
No?
Okay. So here we're going to talk about memorizing transactions. So again, if there is something that you have a transaction that's a reoccurring transaction, so such as, right, you're going to get your rent bill. That's a great example. Rent bill. Every single month, you know exactly what your rent is going to be. I mean, just paying the rent itself without the utilities, right? You know exactly what your rent's going to look like every single month because you either, signed a contract that says, hey, rent's going to be $1,500 a month. So that means every month you receive a bill, you know exactly how much your bill's going to be for rent. All right? That's going to be an example of a reoccurring transaction that you can have QuickBooks memorize, so then it makes it that much easier to process a bill. And you can even have it automatically fill in for you and set reminders that you have a bill coming up, all right, and you need to save that transaction, all right? Now, there are lists of what you can and cannot memorize, okay? So most often things that you can memorize are going to be anything such as invoices, right? Your common customers that come in and get the same thing over and over again. You could do invoices. You could do general journal entries. You could do sales receipts, okay? You could do bills, right? And other types of things like that. The only one that you cannot, three. The only three things that you cannot memorize for is going to be bill payments, okay, customer payments, and your employee paychecks, right? Because those three things, right, you can't predict how much you're going to pay your vendors. You can't predict what your customers are going to pay you, right? There's chances where you'll have a customer that gives you half the money. And then if they do pay you the other half, then they do pay you the other half. And then the last one, third thing is paychecks, because you never know what your employee's life is, right? One day they can call in sick. Then I can't cut them a paycheck for all 80 hours, right? Because they only clocked in for 72. So there are many reasons for those specific ones is bill payment, because once again, you can't predict how much you're going to pay, right? A credit card is a good example, right? Just because you have a minimum payment, you can choose to pay over the minimum payment, or you could choose to pay the minimum payment, okay? Never pay less than minimum payment. But bill payments, again, you can't predict how much you're going to pay. You can't predict how much your customer is going to pay, and you can't predict how to pay your employees, because those have very variable factors that could contribute to how they make the payment. So those are the only three that you cannot memorize. Okay? So for this example here, we're going to take a look at insurance, right? Insurance is a popular one that you're going to see in the mail every single month for the same amount. Okay? So here, what you're supposed to do first is you need to create the bill first, and then you can go ahead and select to memorize it. So then the next time you enter in that bill, whether it's for that same company or not, it should fill in all the information for you automatically. So here, first thing I gotta do is fill in my form to match exactly what I need to match. So in this case, right, the person that I am going to be doing insurance for is going to be Sinclair Insurance, okay? Date for this one is going to be, I believe it's the 15th of January, okay, 2025, okay? Now, of course, the only difference here is the reference number because, again, every bill is going to have their own reference number, so you can't memorize the reference number at all because it's not your bill, okay? It's whatever you receive from this vendor. Okay. Now I'm going to go ahead and indicate that the note here is going to be monthly insurance expense. Okay. And once again, it's going to be an expense, and this is going to be insurance expense. Okay. Now, once again, the amount is going to be for $600. All right. And once again, if I type it in here, it's going to automatically copy it up here. All right. Memo. We're going to say insurance expense. Or I guess this is the same thing here. Monthly insurance expense. All right. I believe this insurance, let's see, is for, I want to say it's a San Jose location. Let's see. Can someone look in your book and tell me if I have to assign this to a specific class? Okay. In this case, I
think so.
there's
Doesn't show.
it doesn't say.
Not
No.
right now, you don't.
Doesn't show one.
That's fine. So that means this insurance.
For class, I see San Jose.
San Jose.
Yes.
I figured it was San Jose.
Well, you put San Jose in when you edited, I thought.
Oh, okay, yeah, you're right. Good job. Okay. So in this case, right, so in this case, I'm going to leave my class blank for now because the exercise makes you go back and edit that information. So once again, here you go. That is my bill for $600 every single month for insurance. Okay. And I'm going to go ahead and click either save and close. You could do that, or you could just click save at the top of the window right here. Okay, so once I save it, right, I'm going to leave this window here because the next thing I'm going to do is I'm going to go ahead and go over to the top right here and click on memorize. So that means every single month I'm going to be receiving insurance expense. So once again, you could choose the title of this memorized report or memorized bill. I could say this is my monthly insurance bill. Okay. Now again, it will give you three options. You want to add to my reminders list. Do not want to remind me, or do I want to choose automate the transaction entry? And you definitely want to automate the transaction entry. So instead of having a reminder to enter one in, right, it's going to create and fill out this form for me automatically, and I just enter in the bill as I go. Okay. Now again, it tells you how often are you going to be receiving this this bill. In this case, I'm going to get it every month. Now, what's the date that you're going to be receiving it? So the next month that you're going to be receiving the next bill is actually going to be for February 15th. Okay. of 2025. All right. And then how many number of reminders? So in this case, how many times are you going to be needing this monthly insurance expense bill populate? In this case, we already have it for January. So that means the next one I'm going to have is for February. We're going to have another one in March, April, May, June, July, all the way to the end of December. So that's going to be 11 more bills I will be needing to record. All right. And then days in advance to enter, I'm going to say, in this case, I'm going to say 0. So that means every 15th, it's going to notify me that, hey, I have a bill that I need to enter in. Okay. And when I enter it in, then I can choose to whenever I want to pay it. Right. They give you the terms of net 30. So I have 30 days to pay for it. Okay. So that is how you're going to memorize this report. And I'm going to click OK. Right. It just took a picture of this screenshot. It took a picture, right, saying that it saved this bill exactly the way it looks. So the next time that you look at it or next time you pull up a bill, this is what's going to be automated, okay? Now, here's what I want to show you because there are 2 ways for you to enter the information, right? You can just go ahead and click on Enter Bills, type in the same person's name, Sinclair Insurance, and it automatically fill out everything for you except for 2 things. It didn't fill out the price point or the billing reference number, which is fine because we already know what that is. And the date has not changed either. That's the most important one. The date and the amount has not changed. All right. This one, if we're going to be using enter bills, even though it automated, that I'm paying insurance, that's not how you use memorize transactions. But it does make it easier for in case you don't know where to find it or you don't like going that way. This is the second way that you could use by entering in the bill, but a lot of the information is missing. The only thing that's filled in for you is just that you're making a payment for insurance. Okay? So the best way to go ahead and use the memorize transaction, okay, is by going to list at the top of your menu bar, and you're going to go ahead and click on memorize transactions. All right? So then once you get memorize transactions, you have this right here. Okay? Now if I double click on it, now it's going to recreate for me this bill. That it has a problem. You are trying to create a new bill. Okay? And if you have one open, so in this case, I'm going to discard changes. Okay? So there we go. By me tapping discard changes, right? Here, by using the memorize transaction, here it dated it for me for February 15. It's indicated that says monthly insurance expense. The expense account is there. And on top of that, my $600 is automatically filled in there for me. So in this case, that's how you can maximize the use of memorize transactions if you want to do it this way. And this is the best one because then you don't have to fill in all that extra information for you, right? It does it for you and it gives you the time date too. So in this case, I could go ahead and click save and close, right? And that means the next time I open it, it's going to record the next one for March, okay? Now, for any reason that I need to go ahead and make modifications is pretty straightforward, right? If I double click on that one more time to produce my March statement now, let's say now I've been noticing, oh, I need to be assigning my classes. So again, the ones that you've already created, you could go back to those bills and just edit the information to say it's for San Jose. But let's say I want this to be now memorized from now on. So what I'm going to do is I'm going to go ahead and click on San Jose. Okay. And then I'm going to go ahead and memorize this transaction once again. So you're going to go up to the top here, right? If I do my drop down menu right here to view this, I'm going to re-click memorize once again. And it says modifying insurance expense is already in memorized reports. And then it's going to say, do you want to replace it? Yes. So here I replaced it. So then the next time I open up another bill for April, it's going to be automatically assigned with the new changes of the San Jose location. Okay? Straightforward, pretty easy, not very hard. And once again, that's just to edit and modify it. But let's say I don't need this insurance expense anymore. Okay, yes. I don't need this insurance expense anymore. I can simply right-click and delete that I don't need to memorize transaction anymore. Or I could go back down here and just delete it from here as well, right? I can go ahead and delete this memorized transaction. So delete and yes. Simple and easy, all right? Any questions in regards to memorizing transactions? So not only can you do a bill, you could do purchase orders, you could do sales receipts, invoices, estimates, right? Anything that you want to memorize except for those three things: bill payment, receive payments, and paychecks, right? Any questions in regards to memorizing transactions?
No.
No.
Okay. All right, awesome. Okay. So I believe the next section we have in the book is going to talk about how we can keep track of our fixed assets. Okay? So in this case, right, here's a new I guess I shouldn't say new. Here's a concept that I have to teach you just because the difference between the previous book and this book is now this is the complete version. So there's a section that allows you to keep track of your fixed assets. Okay, so it's been around for a long time, but in this case, this part is actually new in this book. So how to use fixed assets item list and how to keep track of fixed items. The purpose of keeping track of fixed items is for one and one thing only: to be able to depreciate your items. Okay? Now, the definition of depreciation, right, is that when we purchase our assets, right, and we use them in the business. Now, if we're following the rules of GAAP, we need to record our asset at historical cost, meaning the day that I purchased it is whatever is going to be recorded into my books. So if I purchase a machine for $10,000, that means if I use it and I use it for my business, that means in 10 years, it's still going to be reflecting in my book as $10,000. However, depreciation, which is a non-cash transaction, is a way that you can represent that you're spending or you're using the fixed asset. Okay? So one thing that you have to know is, okay, great example, right? If you buy a couch, you sit on it, you use it, right? And you go back and you try to sell it out to I don't know, on Craigslist, okay? You can't expect someone's going to buy it for whatever the amount that you purchased it for, okay? Because you've touched it, you've used it, you sat on it, you know? The pillows are not, I don't know, pillows are not fluffy anymore, whatever reasons that makes your furniture used, okay? And with that being said, right, that means you're going to sell it for significantly less, and for you to represent that loss or for what it's actually worth, right? That's where depreciation comes into play, because depreciation allows you to take the asset value, right, And as you go through the years of using the asset, right, you can split up the expense and lower the fair market value of the asset, right? Because you're using the item, okay? Great example. I buy a TV, brand spanking new from Best Buy. I go back and return it. They're not going to accept it for full 100%. They're going to say, well, I can't give you it back. Or, bad example, let's do a car. You drive off the parking lot, right? The minute you drive off that parking lot, you're using the brakes, you're using the gas, you're using the odometer. You've already used that asset, right? And you go back and try to return that car. You can guarantee that that person's not going to give you the money back because you used the car. All right? And how they determine it is by how you used it in terms of its life, in terms of are you going to just cost it evenly throughout its useful life? Or are you going to expense it in a meaningful way, whether it's units of production, which is if you're doing, for example, cars, right? You could base it on how much miles it's been used. Or you can do another depreciation method that we learn in accounting, which is double declining, where you get the asset for the first time, you use it more frequently in the beginning of its life, and then you slowly stop using it as it gets older and the technology gets older. Okay. So with that being said, right, now they do recommend you for using this fixed asset list in QuickBooks is that you do need to already have the accounts already in there in place before you can list out your fixed assets. Okay. So in this example here, they tell you that when you purchase your fixed assets, right, you should always make an account for them. Okay, so if I go ahead and type in fixed, right, oops, let's actually clear that. Okay, refresh. So if I just go ahead and just look into my assets right here, I can see my fixed assets right here. I have a purchase of equipment, I have buildings, I have land, I have leasehold insurance, I have vehicles, okay? So all of those are going to be considered fixed assets, right? Whether you purchase furniture, land, anything that has a life to it, okay? And apparently according to QuickBooks, a value of over $2,500. Okay. That's going to be considered something that you are going to consider as a fixed asset that you must depreciate. Okay. Now, with that being said, the book also tells you, well, if you are going to be creating fixed asset, the best way that you could do it is organize it in a meaningful way where you're creating two sub-accounts under one main account. In this case, I'm just going to show you an example real quick on how to depreciate an asset. Okay, so once we already have that, right, we have vehicles in there, all right? And I'm going to go ahead and click on my list, and I'm going to go ahead and add that into my fixed asset item list, all right? And this is how, when you do this, this keeps track of how much your fixed asset is worth, but also allow you to help you depreciate the asset itself. Okay, so I'm going to go ahead and click on new, okay, and this is what you're going to fill out in this form here, okay. Very first thing is going to be asset name and account number, which is in this case, we are using the vehicles account, okay. Okay, new item list right here. Company vehicle. Sorry, I'm having a little difficulty typing here. Company company vehicle. Okay, and this asset account, once again, is directly correlated to this vehicle account. Okay, so what are the descriptions here, right? Or in this case, purchase description. Okay, item is used. All right, we bought a used 2020. I think it's a Ford, if I'm not mistaken. Let's see, 2020 used 2020 Ford Escape. All right. So here, the description is going to be 2020 Ford Escape. Escape. Okay. Okay. Sales information you can ignore because we're not selling this item. Okay. The date that you got it was going to be I believe.
A question.
Yes.
In the book, it's the opposite. Fill places on the name and number and the purchase description.
We are on the purchase description side.
They say in the purchase description, utility vehicle.
This
And on the asset name and number, it's a Ford Escape. So it's not make difference or.
Oh no. I guess that's right. So company vehicle.
Uh-huh.
Okay, and the asset item name.
It is 2020 Ford Escape.
We go. Okay, date here. We bought this on.
Just in the company vehicle, always also describe 2020.
Say so company vehicle.
It's a 2020 utility vehicle. Yes, you gotta write it down the row and where it's a set description also the same thing. So
Okay, that's fine. Company vehicle 2020 utility vehicle. Right. What's the date that we purchased this on?
12/15/2004.
12.
2024. I'm sorry, 2024.
12/15/24. Okay, so I'm gonna double click on that. 24. We purchased this this vehicle for $20,000. Okay. Vendor / payee, like we don't have a person there. Okay. So then the asset information. So the asset description. Once again, I think this section is. Oh wait, actually, sorry. The person here is National Bank since we. Okay. And the serial number is 1FT10011001. I think that's right. Okay. And the place is going to be San Jose location. So location. Okay. San Jose. Asset description, 2020 Ford Escape. Okay. I think that's all the information I have to fill in there. Double check with your book. Okay. So I think that's it on this one. And then I'm going to go ahead and click OK. So there we have it. Under my assets, I have it for $20,000 that we purchased it on December 15, 2024. All right. Now, every time you do depreciation, right, and you calculate that, you are going to be doing a general journal entry to this. But once again, you are not going to be touching the actual item itself because you only value it or revalue it when you sell the asset. Okay? So in order for you to see that information, you are going to you are going to run a trial balance so you're able to see your fixed asset account. In this case, we are tampering with our vehicles. So our vehicles should reflect the amount here, right? Because we are going to be doing accumulated depreciation in a second. Okay. So now we're going to talk about creating control accounts. So that's the, I'm not going to talk about that one. This is where you're doing the whole two sub accounts plus one main account. Nope, you don't need to do that unless you feel that it's necessary to keep yourself even more organized. So then you could see your actual fair market value. So you would be setting up your asset account, right? Each sub account's going to be whether it's the actual fair value of the asset that you originally purchased it for. And then you have a contra account or contra sub account, which is your accumulated depreciation, which is going to take away from that account. Okay? So once again, if you think that it's necessary to do. In this case, I don't think it's necessary per se because it does it pretty much for you. All right? So then again, we're using the fixed asset list. Okay? So there you go. We filled in all that information. Okay? So now the next step I'm going to talk about is how we're going to use this. We're going to calculate and record the depreciation expense manually. All right? Now, if you do have the accountant's version, you do have an option where you can process the fixed asset to automatically calculate the depreciation for you. But in this case, we're assuming that not everybody is going to have the accountant version. All right? Everyone's either going to get a Pro, Premier, or Enterprise, okay? Because the accountant's version, right, is for the actual tax accountants themselves. But in this case, we're looking at a trial version of the accountant version. So you're able to do what Pro, Premier, and Accountant can do. Okay? But in this case, I'm not going to show you what the accountants can do because I need to show you in case you don't get the accountant's version because that's for tax accountants and get Pro or Premier. So in this case, right, we need to manually create a general journal to represent the depreciation that we're going to be using to represent that we used our car. So in this case, we're going to go ahead and click on the general journal entries, okay? So I'm going to go to company, and I'm going to make a general journal entry, okay? And see, I don't get that window again. And then once again, now it says 2025 2. I'm going to make that 4 because we've already made 2 entries in there prior. Okay. And once again, what's the date on this? This was still January 31st, correct? Okay. We're going to go ahead and calculate this. And in here, once again, first thing you have to do is the general journal entries. So journal entries bank account.
And the day is on the 2025.
What day?
2025.
1/31/2025.
1/31/2025.
Yeah, well, my
January
day.
31st,
Mm-hmm.
2025.
Okay, 2025. Okay, I'm gonna go ahead and there you go. Right, general journal 2025-4. Okay, the adjustment entry thing right here is already clicked off for us. Okay, journal entry is going to be the very first one. And then this one, the memo here is going to be the 2020, let's see. It's going to be, account is going to be, menu,
62,400.
62, what was that? Oh, for the account?
The account.
I'm talking about the memo right now. The memo is going to
Only
be
depreciation
monthly depreciation.
on 2024 Escape.
Okay, monthly depreciation for 2020 Ford Escape. Okay. So that's the memo for the general journal entry here. Now, first thing that we're going to do is we're going to recognize that we are creating a depreciation expense. So if you have it, you should have it, depreciation expense, all right? And you're going to debit it for $125, all right? Then your even credit is going to be for the accumulated depreciation. Okay, so in this case, it's not going to be specified on which asset account. So we're just going to leave it at accumulated depreciation, and it's going to be for $125. Okay. So we already wrote the memo here that this is directly related to the Ford Escape. All right, and that's how we're going to create a general journal for $125 for the 2020 Ford Escape. Okay. And that's it. And we go ahead and click Save and Close. All right, QuickBooks now used fixed asset items and fixed asset listing reports to track fixed assets, which is correct, right? In this case, now the question is asking here, would you like to create a new one? Okay, in this case, no. Okay, we'll just click OK. So there you go. So there you go. There we have it. That is how you record depreciation. Okay, our fixed assets still going to reflect at $20,000 because once again, right, if we understand the rules of GAAP tells us that no matter what it is, you're going to record and keep it on your books for whatever the original historical value you purchased it with, okay? Any changes that you have to make to this, it's either due to the market, but most cases, right, most fixed assets, the only time you can do that is if it's an inventory item, right? In this case, you can't modify this until you either get rid of the item, dispose it, sell it, etc., etc. Okay? And that's going to include the accumulated depreciation along with it. And with that being said, that's, again, higher level of accounting, right? That's you learn that in intermediate accounting on how to dispose your assets properly with including the accumulated depreciation. Okay? But in this case, that's all you need to know. All right? Any questions in regards to depreciating your assets?
No.
Okay. All right. So I'm going to stop here, okay, because it is exactly 3:10 right now. So we're going to call break.